Thanks for clicking. All eyes were on the Bank of Canada this morning as it was set to make its second interest rate announcement of the year, with most expecting the bank to cut interest rates in an attempt to soothe the fallout from the Trump tariffs. We got our answer at 9:45 this morning when the bank did in fact cut interest rates by 25 basis points, bringing the policy rate down to 2.75, citing uncertainty over the Trump tariffs.
It's go time.
And Bank of Canada Governor Tiff Macklem and Deputy Governor Carolyn Rogers held a press conference shortly thereafter, where the governor did his best to calm the nerves of Canadians by laying it all out on the table.
I don't have a forecast for you. I have no further comments. I don't have much to say. I'm not going to be commenting on political leaders, or we can't provide forward guidance.
Sometimes I got nothing to say.
Now, to be fair, there was no way he was going to answer the questions that he was being asked, and the media should have known that. It's all a bit of pageantry. With that said, though, in all seriousness, we did see a central bank much more concerned with the inflationary impacts of the Trump tariffs and the retaliatory tariffs stemming therefrom. And as we'll see, we also saw a central bank that doesn't want to get on the bad side of the U.S. president. Well, the governor at least. Rogers was a bit more scrappy.
Yeah, we saw that particular musing.
So what I want to do today is go over the bank's interest rate announcement, take a look at this inflation-focused press conference held thereafter, and then discuss some implications. As we'll see today, only one rate cut questioned this conference, after 36 rate cut questions last year. Meaning, either the shills for the real estate industry have finally realized the gravity of the situation, and maybe the industry could consider going forward and doing likewise, or no one wants to win the 2025 Award for Excellence in Canadian Journalism, where we track each press conference who asked the most times about interest rate cuts. We will obviously continue to track the extent to which the media is able to maintain this professionalism and award that trophy at the end of the year on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this interest rate announcement. On to the interest rate announcement. As mentioned, the Bank of Canada cut interest rates again this morning by 25 basis points, bringing the policy rate down to 2.75. And as mentioned, the decision to cut interest rates was due almost entirely to the Trump tariffs, with the bank noting that the pervasive uncertainty created by continuously changing U.S. tariff threats is restraining consumer spending intentions and businesses plan to hire and invest. And yeah, as we've talked about before on this channel, we don't even need these tariffs to materialize to slow down the economy, which they will. The uncertainty brought on by the threats themselves will be enough to bring the economy to a halt.
The uncertainty alone is already causing harm.
With that said, although the majority of the announcement was focused on the Trump tariffs, the bank did take the time to acknowledge what the majority of us already knew, that inflation has been coming in firmer than the bank had expected, but has appeared to be lower because of the HST holiday. The bank acknowledged that with that holiday now over, inflation will pop up, probably to about 2.5% at March's reading. So yeah, as we talked about in the previous video, there is an inflationary problem occurring in the background. Inflation is stickier than had been expected, though a lot of that has been masked, and of course isn't making much news in the media as everyone is focusing almost solely on the Trump tariffs.
I have a very short attention span.
But the governor did address these inflationary worries in his opening statement.
Council will be on assessing the timing and strength of both the downward pressure on inflation from a weaker economy and the upward pressure from higher costs.
So yeah, inflationary worries playing a much more prominent role in the bank's opening statement than we've been accustomed to over the past few months. And inflation was also the dominant theme at the Q&A session held thereafter, with the governor asked whether or not the inflationary effects of these tariffs would be a one and done, or if there's a possibility that it could take hold.
What kind of inflationary impact are we talking about? And do you view that as a one-off jump in price level, or is this something that could feed through to inflation? How are you kind of gaming that out?
And although the governor didn't offer a very reassuring answer, we did see a bit of frustration on his face with regard to the U.S. president.
Given the pervasive uncertainty and the unpredictability of U.S. trade policy, I can't put a number on it. The scenario is changing every day with new announcements, literally every day.
An idiot.
So yeah, we are seeing a bit of frustration on the face of the governor, though as we'll see, he's not going to verbalize that annoyance. But he did sort of address the main concern, that inflation could in fact take hold, and noted that the bank will keep an eye on it.
I mean, the reality is some prices are going to go up. We can't change that. What we're particularly focused on is what we don't want to see is we don't want to see that first round of price increases have knock-on effects causing other prices to go up, that becoming generalized and ongoing inflation. That's what we can't let happen.
You think?
So I think the governor is saying that the bank is expecting some price increases in the immediate term, but is willing to raise rates if it looks like those price increases are taking hold. Next, the governor was asked if he wanted to make a comment on the Trump administration's view that these tariffs won't raise prices, that these tariffs are non-inflationary.
Very clear, Howard Lutnick has said that he does not think the tariffs will be inflationary. Can you just explain why you believe you think the tariffs will be inflationary and what you make of the fact the U.S. administration has been adamant that this will not increase inflation?
Well, look, I'm going to let the U.S.
And of course, he's going to sidestep that question. Take a look at Rogers' face. I'm not sure Governor Macklem wants to end up on Truth Social.
You mentioned me by name?
And while, of course, the governor didn't answer that part of the question, he did go over why the bank thinks these tariffs could be inflationary for us here in Canada.
As I outlined earlier, there are a number of direct cost pressures involved with tariffs. The Canadian dollar is depreciating. Anything you import is more expensive as a result. Retaliatory tariffs add an extra charge on anything coming in from across the U.S. border. That increases costs. Businesses are they're also looking for new suppliers to avoid tariffs. They're looking for new markets. That entails costs. There could well be supply chain problems.
So yeah, lots of inflationary pressures stemming from these tariffs on the horizon, but the extent to which those pressures will be offset by a weakening economy remains to be seen. The bank just doesn't know. No one knows, not one person, least of which are in the real estate industry.
All right, here's what you're going to do.
And we can kind of see the governor further worried about gaining the attention of the president when he was asked about the president's musings about the U.S. not paying its debt.
The United States is musing about defaulting on debt. Could you talk a bit about how financial stability...
And then, rather than answer, the governor passed the question off to Deputy Governor Carolyn Rogers, who offered a very diplomatic answer, right after she didn't.
Yeah, we saw that particular musing. Concerning.
But yeah, Rogers didn't really address the question, but did note that the markets are starting more and more, as we've seen, offer their opinion as to what they think the president's actions mean for the economies.
We're seeing the markets, the equity markets in particular, in recent days start to react to trade policy. I mean, there was some thinking that maybe they were underestimating effects, but I think reality is sinking in. We're seeing the equity markets move around. We're seeing yields move around, spreads move around, as I think everybody sort of digests what's coming out of the White House. So.
And finally, the one rate cut question from the conference came from Market News.
Did you consider cutting interest rates by 50 basis points? And if so, did you...
And of course, the governor didn't answer, as the governor not once, not ever answers by how much they think they should have raised or cut interest rates. With all that said, I think the message coming from the central bank's announcement from the press conference held thereafter, which was very much inflation focused, is that everyone, the central bank, Canadians at large, are getting accustomed to the idea that these Trump tariffs could in fact be a reality. The bank's surveys that were released today shows that about 1/4 of businesses plan on passing on 100% of price increases brought on by these tariffs, and that Canadians are getting more and more worried about their job security, which obviously, given the implementation of today's tariffs, the 50% scare that happened yesterday, the looming April 2nd tariffs, and who knows what happens in between and thereafter, that's probably for good reason. But at this point, we still don't have those 25% across the board tariffs. We had them for about 2 days, after which they got rescinded or put on hold. Who knows if they're coming back on April 2nd, along with a broad range of every other tariff as well. Europe reimposed $30 billion today. Canada is going to be imposing another $30 billion today. Japan isn't overly happy that they didn't get an aluminum and steel exemption. So, these responses are adding up. But it does appear as though the central bank is preparing for the worst case scenario. We will obviously continue to track how all of this plays out on this channel. Make sure you click like and subscribe if you want to get those updates. But for now, thanks so much for watching.